From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Hello, this is the COB, all the stuff you need to know about the day in business and markets. I'm Kyle Rotter and Danny Akiyé. Great to have you back on board.
Thank you.
Well, Monday, it was a slow one.
Yes. Volumes are really, really low. Let's face it, a lot of people have decided to take a super long weekend. And as a result, not much happening locally. There are quite a few big moves in terms of some of the share prices, but volumes aren't reflective of, really, I think, where markets will go over the course of the week. Quite defensive. Healthcare, information technology, really, really firm today. When I just checked a moment ago, up around over 1%, those sectors. And of course, there's quite a lot of profit taking going on in the big miners with that. Probably some not great quarterly updates that we saw from South 32 as well as Fortescue, but also that very weak iron ore price that we're seeing at the moment, trading down to around US $104 a tonne.
Yeah, and it was only at 120 a few days ago, so that is quite a pullback. And we'll see if we can get the SIBO 200 up here just to get a sense of where the index has finished today. Unfortunately, we're having issues getting that up. So let's crack on to the three themes for the day. And
I'll
actually,
just let you know just this. Sorry, I just wanted to tell you the ANZAC 200 pretty much flat on the day.
Right.
Look, like not even 0.1%. So that really goes to show you not a lot happening.
No, fitting. And I've diagnosed it as a 4-day weekend because for everyone and all intents and purposes, and seemingly 90% of Sydney, it's a 4-day holiday, very, very quiet out there. But we already spoke about production misses for the likes of South 32. We'll talk about that in a little bit. Fortescue Metals as well, delivering some disappointing news. The stock was down about 3%. But now we're waiting on tech. That's probably fair to say the next couple of days is really tech focused.
Yeah,
those tech results.
Totally. I think that they will be really, really interesting. And I don't want to preempt what I've said in the view, but I think a lot of investors are going to start to wonder whether all those cost-cutting measures that big tech has put in place, they've had a lot of redundancies. So I think the thing to be looking for is not so much revenue growth for some of those big tech companies, but really it's going to be what you're seeing in terms of profitability, pricing power and margins.
Yeah, okay, well, we'll keep an eye on that. Let's just crisscross just some of the areas of the market that were moving a little bit today, starting with the metals miners, if we can get that up and running. Here we are. And as we mentioned before, Fortescue Metals down 3.4%, did come out with a bit of an update today. But weakness across the board, South 32, like you said before, we're going to dig into that a little bit more, no pun intended, in just a moment. But miners, generally speaking, very weak. Energy too, just mentioned South 32, but the energy landscape was pretty soft. We have seen some relative softness coming through in the oil price over and coal prices too, it has to be said. Coal's taking a little bit of a beating. In fact, I know you didn't do the call today, but had some very interesting conversations about the investment case for coal amongst the lads who are on board today. So I suggest going back and listening to that. And healthcare, last but not least. I dug around as best as I could. Maybe someone can.
Well, I could actually. The only thing I could say that some of and although they're not directly comparable with the US, so you can't say, Eli Lilly and Merck and all of those companies. But if they are thrown into, let's say, a composite of kind of healthcare companies, even though they're pharma, they're all reaching close to 52-week highs, if not 52-week highs. So in the US, there is that rotational back into so-called defensives, Procter & Gamble, again, that sort of 52-week high. And I think that's, Australia tends to, whether we realise it or not, the sectors and the buying tends to follow suit. So again, people probably seeking some shelter in these healthcare names. We've got some CPI reads this week, both in Australia and the PCE in the US, which is the preferred inflation measure for the Fed. So bit of defensive positioning in what is really a market looking pretty much like it was on life support again today.
Yeah, appropriately enough. And Polynovo and Nanosonic, two of the biggest gainers for the session. And again, couldn't find any news for that. But nevertheless, up about 6 or 7%. And Tilix as well. That just keeps flying.
Yeah.
Well, we were joking today, weren't we, that maybe the algos have gotten stuck into that
Yeah,
one.
the momentum traders are in big time on that one now.
Yeah, it's up by more than 20% over the last few days, so really remarkable. But we just wanted to go across some of those big stories. We've already spoken about FMG, Invocare as well in the news, not necessarily that sexy, but had a lot of airtime discussing just effectively TPG pulling the bid. Share price I think down by as much as 15%. I didn't see where it necessarily closed, Danny, but you'll be able to have a look. But that deal done and dusted. I made
8%, only 8%. So some buying coming in.
Bit of a bounce off the lows.
Yeah.
In fact, I had Morningstar in today saying too that even when you strip out the value of the bid initially, they thought it was undervaluing the company. That it'll eventually float higher. But South 32. I mean, did you get a chance to look at the production report? There was a lot of allusions to weather.
Yeah, I think wet weather again impacting there and a bit of a miss, but I think they're maintaining guidance, and I guess Mike Gardner might be able to give us a bit more of a glean on that one. But certainly these resource companies, weather continuing to impact, and also cost inputs, not so much on the production reports, but again, they are struggling at the moment.
Yeah, well, the South 32 was the stock of the day. We had Gaurav Sodhi and Mason Sundaram giving their view on, well, whether it was a buy here.
South 32, they have a really good long-term plan that they're executing. Everything appears to be on track. They've started copper production from their new acquisition in Chile. Pretty happy with how things are going. It's a hold.
It's in the middle of a holiday, right? And volumes will be thin, so things will be a bit more volatile. So you've got to take that into context. I think South 32 will struggle in the short term, and if you put a bad result out and then the market is weak, you're not going to hold up as well. So you'll see more weakness. So I think you've got time, but if you look at it in the longer term, I think it's a great stock to be in, and I think the thematic plays well. But short term, I think gets weak. So I'd be selling now and coming back for a trader, but if you're a long-term player and you've been in there, I don't mind holding.
Okay, so probably a little bit of a mixed verdict, I dare say there, and as always, it depends on your investment horizon as to whether you take a nibble at something or not. But let's get to our guest for the day, and very kindly coming in to work just at all, which is remarkable. Mark Gardner from Macro Capital joins us now. Mark, great to see you there.
Good afternoon.
Obviously quiet day out there. I always know it's a quiet day because you always come with very comprehensive notes on those days which are not quite as busy.
If it's a busy day, I tend to...
the notes grow.
Well, I've been speaking to a lot of people and it's ingrained in my head by the time we get to the close. So, but yeah, we've got, obviously, there is a big week ahead. We've got three of the four biggest companies in the US. And there's oil companies at the end of the week as well. Preliminary GDP, PCE, sort of midweek as well. So they're pretty important numbers. And the preliminary GDP, obviously, we get three readings in the US: preliminary, advanced, and final. So this one's the one that is most likely to be outside the analysts' expectations. So this is probably gives it a little bit more volatility. Because the numbers can be out of whack before they revise. So we've got Microsoft and Google on Tuesday, Meta sandwich in the middle, and then Amazon on Thursday. So it is a pretty hefty week. I think somewhere around the 35% mark or something of the market cap. The S&P 500. So and I think obviously 7 stocks have essentially, and these are stats from a couple of weeks ago, but 7 stocks in the US are responsible for over 90% of the index gains this year. So these are enormously important numbers. You've got to remember these are all pretty cyclical businesses too. I mean, Google's advertising, which is massively cyclical. Amazon is as well. Microsoft probably to a slightly lesser extent. With business, being more business based, and Meta is advertising as well. So I think that shift to the non-cyclicals and like healthcare, like Danny was saying before, I think is a bit of I think that's the market kind of realising that we're almost certainly going to have a recession in the US. Interestingly, the Philly Fed, which is a survey for manufacturing in the States, if it drops below 25, it's got a 100% hit rate of predicting a recession, and it was released at negative 31 last week.
Yeah, so many indicators, aren't there?
Yeah,
Mark,
and I think it's so telegraphed, and we've been talking about it for so long.
Yeah.
That level of institutional short means that it'll find it difficult to drop unless there's a severe catalyst. So I wouldn't expect this time around, if we are going to turn, if the market's going to turn, I think it'll be a little bit more orderly unless there's some form of banking collapse or so I don't think we'll see what we saw last sort of April, May, where it just fell off a cliff, because I think the mood, we've all been warned, let's face it, over the last year. So, but interestingly as well, which has been overshadowed by the mega caps reporting, is the European banks report this week as well. So,
that'll be interesting.
Deutsche, Barclays, UBS, Credit Suisse, which will obviously, that's tonight. Credit Suisse, they've moved that up to be in front of the UBS earnings. So that might be one of those little things that just comes out of the woodwork. And essentially, takes people by a little bit of surprise if there is anything wrong with the balance sheets. German Chancellor went to great strains to say that Deutsche Bank was very liquid, etc., which had the adverse effect of people actually then looking.
The situation.
Yeah, exactly. Looking to see if there actually was, because I don't believe when politicians sort of talk about those sorts of things, but. Yeah, so there's plenty on. I mean, we've been risking off over the last week and a bit, and this week could be could really significantly change the momentum of the market overall. So, and look, it may be better than expected. Who knows? Earnings results haven't been too bad so far, but they're against analyst expectations. But they've definitely been weaker than the previous quarter overall. So it's been fairly orderly thus far.
Yeah, it will be really interesting. I was wondering whether or not you could still seeing a continuing erosion in a lot of the cyclical companies or the banking sector, and yet you might see some of those big tech companies, because they have had such huge cost cutting, and they did kitchen sink a lot of the earnings expectations last year. So it will be interesting to see whether they hold up, because really that's the last shoe to drop, isn't it, with the S&P? Apart from those healthcare stocks, which clearly they just keep chugging higher.
Yeah, but I think it's quite smart to, non-cyclicals, that's the first thing you're going to pay for is your health, essentially, particularly for drug companies, etc. I've said all year, I foresee CSL going through record highs this year pretty comfortably. Probably at next earnings season. There's a lot of things going on in the background with those guys. They increase capacity around their plasma ability to take more plasma. They're 30% more efficient. They've got new software system. Obviously, Vifor will start to add to the earnings per share. So I think and they're really only about a 40 PE. It's been knocking on that $120 mark for nearly 3 odd years now. It's been the top of the range. So it could really bust through. So, and we've got a lot of the defensive names in Australia, particularly like GrainCorp and Agriculture, Elders and things like that, which is a little bit cyclical, are trading at horrible lows at the moment, even despite fairly decent earnings. So there is still some decent opportunities out there to get defensive if it starts to switch. But a lot of it depends on the data this week.
And on that data too, we have tomorrow off, of course, but CPI on Wednesday, and then the PCE index on Friday night in the States. That'll really inform what happens in next week, which will be, Fed related, it'll be RBA related, and speculation there. It just seems like the markets are really shrugging all of that off though at the moment. Is it just a matter of not listening and they should be listening, or is it just fairly settled on the rate path here?
It seems to be, like I said, obviously the big boys, instos, are fairly covered to the downside as it is. I'm pretty surprised at the news cycle. How quickly we just dropped. The fact that 2 to 3 banks fell over was pretty frightening, and it was just business as usual. And and these things sort of, that's just the first stress fracture really. So I don't think a lot of these regional banks in the US have reported. First Republic actually pushed their results back, which was a bit of an alarm. But I think it is tonight. So that to me was a bit. Ooh, okay. You're not normally shifting your results when you're doing well. And we've really got there's been a lot of pundits saying, oh, the banking sector's got the all clear, we've had but they were all the big guys that Janet Yellen basically said she'd backstop. We're now going to hear from them, all of the others that she said they would be prepared, they would let fail. So I think there's still, and obviously there's European banks, I think they've got high regulation, I think they'll be okay. Credit Suisse was coming for a long time, realistically.
Yeah.
But then there's still maybe some surprises yet. So yeah.
I was just chatting to someone earlier on, and the amount of refinancing that needs to go on in the commercial property space, well, just generally, is absolutely huge. And there have been some defaults coming through. So the regional banks, of course, are the ones that have the highest exposure, don't they, to commercial property, and not always the best commercial property either. So.
No, I mean, look, you've got hedge funds doing structural defaults at the moment, the likes of PIMCO, where the value of the building drops below and they just hand the keys back. So they're because it's all securitized against the building. So that is, that is pretty concerning. I mean, it's one of those things that, I think it's been referred to in the AFR and things like that as, could be the next big short. It could cause problems if there's already an existing liquidity issue. If it then further constrains liquidity, those more regional banks are going to find it very difficult. So. And that's going to keep that that yield curve inverted and the net interest margin really low as well. So it's going to affect their profitability for a long time. So when you can see the competition in deposit rates, even in Australia at the moment, is super high. So I've never seen banks pass on higher deposit rates as quickly as they pass on higher mortgage rates. It's So that says to me that there's a bit of a scramble for cash.
It could be slightly political as well, do you think, with the reporting of the banks coming up with their results? They don't really want to be in the line of fire of the new treasurer or anything.
Possibly, but I mean, the Big Four particularly have a lot of power, so they traditionally has done whatever the hell they wanted. So I don't really... again, they've obviously been pretty profitable, so it may be, they're trying to a little bit of pre-damage control just in case they don't have the results to back it up. And then, even the RBA has had a fair bit of fire this year. I mean, no one had a problem with the RBA in that downward rate cycle. It's miraculous that we've now got a problem with the RBA and now we've got a hiking cycle. I think it's extraordinarily convenient, and I think they've wound back a few of those proposed changes today already. So, there's a lot of PR games going on across the board, I think. But those net interest margins, I don't think we'll have as big a surprise as what happened with CBA, because that did take people by surprise. So I think analysts and investors will be a little bit more prepared for that drop in NIM. But Macquarie Bank's already flagged the record result, and they always under promise and over deliver. It'd be very odd for them to to not deliver on a promise. They're leading the way with those deposit rates as well. So I think they're one of the highest cash managements around. So there's a lot to be taken into consideration. And we've got the mortgage cliff coming May, June, I think, is the highest rates of those. So there's all of these rate hikes that we've already had. As I've said a number of times, it takes 12 months for the actual effects to sort of start to filter through. It doesn't happen in a second, and the market's getting a little bit absent-minded as to what the consequences of those are going to be.
So just to distill that, I suppose, in terms of an investing approach at the moment, is it still just stay on the sidelines, be patient, wait this out, sort of thing? Yeah,
at the moment, I don't think, particularly after May and June aren't particularly great months in the year anyway. You've got a lot of data coming out, and you're getting paid to sit in cash. So it's not the worst thing in the world at the moment, because I see it as a real opportunity that if the market does collapse, and you're sitting there in it's 20% cash and some bonds and cash, etc. You want to. This next dip will probably be one of the better buying opportunities for the next 2 to 3 years as we roll out of it. So these. So you're going to get things really cheap, high quality companies really cheap. So if you're getting something that's super high quality at a cheap price, I mean, it's all it effectively is time that you need to wait. You can be out of the money, but it's not like they're going to go bust or anything like that. So it's more. I'm more telling my clients I want us to be in a situation where we're almost happy that the market's dropping, because we get to go, we get to hit that shopping
again.
and not be paying high PEs and not be worried about the next result, knowing that we've got it at a discount and that we can, that it's just a matter of writing out, the data and watching the next cycle start. So.
Sage words as always, Mark. We'll leave it there for another day, but have a great public holiday. Mark Garden from Macro Capital.
Catch you later.
Thanks, Mark.
Okay, well, we already had a little bit of a review on what's on tonight, but it's just good to check on the companies that are reporting, actually. Because
Republic Bank. Woo.
Yeah, that's going to be exciting,
interesting.
isn't it?
Well, yeah, potentially. I think, markets are on edge. They're looking for somewhere to go. So, what else have we got? Coca-Cola and Credit Suisse. Well, Credit Suisse, that's UBS now, so we'll forget about that one.
Yeah,
it doesn't really count anymore, does it?
Peeking through the rubble, I suppose.
Yeah.
Just the carcass. But Coca-Cola can be interesting, just in terms of consumer discretionary, pardon me.
Staple,
but
it's more margins, I think, probably for Coca-Cola in terms of what's going on there. But also because we obviously have ANZAC Day tomorrow. So Microsoft and Alphabet reporting Tuesday evening our time. So when our markets open, we will have had 2 trading days for the US. Just bear that in mind for what it is worth or not worth.
Okay, well, here come the leaders and laggards. Let's see what finished at the top of the table come the end of the session today. And I said, those inexplicable moves in Nanosonic and Polynovo that I can't find an explanation for yet, leading to a 8.5% and 4.5% gain.
Maybe they're getting some Tilix
love.
I don't know.
You're caught in the Tilix slipstream. Let's go with that. Pilbara, though, up 5.5%. We were talking about the lithium names and the dynamic, the developments in Chile last week, maybe benefiting some of our local lithium plays.
Some experts, I think Barrenjoey, were commenting that they felt some of our lithium miners would now be beneficiaries, or Australia, I suppose, would be a beneficiary now of more capital. Because you are seeing that LATAM lithium belt being more heavily, I suppose, politicised, or governments wanting to be more involved. But we'll have to see that one play out.
Yeah, without a doubt, and always an interesting dynamic to play, because it is going to be such a crucial commodity in the future. And I dare say that wars could be well fought over it if it's going to ensure energy security. So we will move on to the laggards now, and here we are. Invocare, we spoke about that off the top, down by 8.8%. Again, a few of the analysts that I've read and the ones that we had on today speaking that initial bit from TPG undervalued the company to start with. Really, they were trying to be takeaway that I got, they were trying to be opportunistic by getting the stock at a cheaper valuation when sentiment was bad. Invocare knocked it back, still at fair value. In fact, some of the numbers I've seen floating around, maybe $14 a share is where a lot of analysts see fair value for Invocare. So down 8.8% today. It has to be said too, it actually rallied 40% on the day that bid was disclosed. So
I'm just
swings
having
around
a look.
that,
It's sort of around about 2% prospective yield. Yeah, I mean, 10% upside according to FN Arena in terms of consensus EPS targets. If you like the demographics, it's a terrible pun, isn't it? Demographics, it is one of the preferred, isn't it? Along with Propel.
A play on that space. Moving on, South 32, we spoke about that production update and the disappointment there, and also some just weak commodity prices across the board, probably feeding into that. Lake Resources, Lend-Lease, and Fortescue Metals also out with a production update today, down 3.4%. Also, we spoke extensively, obviously, about that iron ore price. So there you go, the laggards. Here's our most, what we wait for at the end of the day now. It's our small cap names, where we put a whole bunch of names in a hat and we see what comes out.
Carl and Danny grabbing for like, wow, ImpediMed, again, I haven't, I don't know if there's any news about that one today.
Fleetwood, I don't know, maybe they're touring.
Duratec.
Let's go, the laggards in the small cap space. And what do we got here? Is Jervois Global on there? I hope it is. Let's have a look. No chart. That's okay. We'll move on. We'll focus on the positive today when it comes to the small caps. ImpediMed and Fleetwood shooting the lights out, would seem, just for the day. Well,
is that it?
Well, it's a kind of a Friday kind of Monday, or a Monday kind of Friday. What's the saying?
It feels a little bit that way.
Yeah.
The View. Got some quite interesting stuff in there. Sorry, have to do a little bit of self-promotion here. No, hardly. So just really touching on some comments from Aswath Damodaran, who's a professor over at the University of New York, talking about how he sees some of the mega cap stocks. Also touched on Bed Bath & Beyond. Just a reminder to investors in these times, cash flow, and strength of balance sheet. You don't want overly geared companies, and also some of that debt that needs to be rolled over going forward. So yeah, there's a lot of interesting tidbits at the moment, and the markets really, they haven't gone through their former highs. So maybe some of the, I'm no technical person, but I do know the technical chartists like to see markets making a higher high, not a lower high. So it's going to be a big week.
Definitely, and we're waiting for that catalyst to see if we can make a directional move in that market, of course, because it has been a bit of a lull over the last week. It was certainly quiet today, but for good reason. So the ASX 200, and Danny, I think you might have it there just in terms of where we finally finished.
Yeah, let's have a quick look. Well, let's say for all intents purposes is down, 0.1% or 8.4 points. So yeah, not a lot. There was a bit of buying that came into the close and pushed some of the prices up, but really, not a lot going on. Not a lot going on,
and we'll pick it up on Wednesday morning, but in the time being, have a lovely day off tomorrow for ANZAC Day. Remember, you can catch up on all the views and interviews on our website and app. Have a great day.
Bye.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.